guys have to understand is when it comes to trading ranges, most ranges, like most ranges that you guys can see, like at a weekly range, most ranges are not usually this big, right? Between 10 to 20 weeks, we have some very erratic moves like that, right? But not all weeks are going to leave you a fat ass range like that. More often than not, your weekly ranges are going to consist of some smaller movements like this, right? I'm pretty bullish on the DXY. We came down. I'm not sure if we came down 50%. Yeah, we did not make it to 50%. So I guess this is a really great place to start. So that's our whole range to the upside, right? And it's not that we can't make it to the downside all the way. It's just understanding that we don't need to continue moving to the upside. These previous weekly lows could have been enough for us to take price action to the upside. Now, here's the thing. Next week can take place, close this candle, and we can come up here and then come back down one more time below 50%. Right? That's what leaves the possibility, is that we may not create that higher high, and we may just continue falling and take out this low one more time for internal liquidity. Until that external liquidity is taken out, that high is taken out, we still have the possibilities of returning back below this low. Right? It's understanding that this is your whole range. Yeah, we don't need to make it all the way to 50% or below, right? And if we do start, that's why we pay attention to all the lows. And so if we do start getting a rejection from a previous low to the upside, the only thing that would confirm this upside movement is when we take out that high, and then this low becomes a strong point. But until that happens, we can literally just come above current weekly high and redistribute to this downside and more closer to the 50%. So I am bullish no matter what, still bullish overall. Maybe it's not now that we take off, maybe it's in another week or so, however long it takes. I'm pretty bullish on DXY, and just acknowledging my range. We still have a little bit more to come back lower, but here's this last push down right here. And so that's kind of what has me more on the side that, okay, like we're more than likely just going to continue going to the upside. So we'll see, I'm sure by the end of March, how inclined we are to go higher. Okay, for now, I do see some upside movement. We did distribute here on the daily. We did take out quite a bit of liquidity here on the daily perspective as well. We took out this low. That low's not a weekly low, it's just a daily low right there. The weekly low is right here. So again, we could come down lower, take these relative lows out, and continue moving to the downside given this daily range, right? But given this weekly range, we can make it one time lower. And then on the daily range, we have bearishness if we were to go lower. Okay? So we can take out the triple bottom and then sweep this one more time, come into this previous area of accumulation, and then just leave. Honestly, it's going to be very interesting to see how internal liquidity is taken, and then we do go to the upside and sweep external. But when there's, notice, this is a large range there, right? Imagine these ranges on the daily, the weekly, they may look small, right? Like this one was probably like the biggest one next to this one, but for the most part they're pretty small. And And this is the large range, what a large range looks like on the daily. That's a pretty large range day right there. Okay, last night or Wednesday's price action was a pretty large range day. Okay, and notice that just like on the weekly, on the daily there's a lot of small range days in between these bigger ones, but a lot more small range days than anything else. Okay, what does this tell you about large ranges? When there's a large range, it's usually made because of news or because of some catalytic, some occurrence, right? Some level of manipulation. And usually large ranges, when they happen pretty fast, they just determine that the range of the day is usually already done or predetermined. Okay, and I'll show you guys a couple of examples as to when DXY did that. And I think the best one is just last night. Okay, we're going to be going over the stock exchange, so I'm going to be focusing on the 9 a.m. the 9:30 open. Okay, you can see we swap previous daily lows right here, right? We take out all that previous daily low, and then Asian and London just accumulates and takes off. Okay, this is a great example as to when the range was created overnight. And a large range usually means that we're done. And we're probably gonna play the high and the low of the day have already been predetermined. Okay, so for your notes. When the range was created between Asian to London, as long as it was before New York, okay, when there was a large range created before the New York Open, anticipate that high and low to be your range of the day. Okay, and sometimes that will happen. That doesn't mean there's no trades. It just becomes a lower probability day. Lower probability session at that moment, right? Like you either during London and missed it, or you were probably in during London and caught that big nice move, or you missed it because you trade New York, and that's fine, right? It's understanding that it's totally fine to miss these type of trades. So we move to the upside. Now, just like there's large range days, you also want to keep your eyes out for a small range day. These smaller range days right here, like this high to this low, this high here to this low here, right? See, these small range days, when you can acknowledge these small range days over the period of time, by recognizing them, you will see that these smaller range days are just here to build liquidity. Price action was just mitigating lower low, lower high, lower low, lower high, lower low, right? Just walking itself down very nicely, very trendy, I guess you could say, right? And they create these very small tight range days. And what will happen is we'll sweep, if we're bullish, we'll sweep the low and then run the highs. Okay, these small range days, there may be one or two of them consecutively, and they're probably going to be followed up by a nice liquidity run. Okay, so your liquidity runs are really going to be your guidance as to what direction we're breaking out on. But obviously here you guys already knew that on the daily we were coming into this previous area of accumulation. On the weekly as well, we were pretty bullish, and so there's a lot of conviction showing us that we were going to move higher. Okay, from this area, right? But that long range day, we just stayed between it. Dow Jones, notice. Okay, here's the open. Oh, shit. There's the open. From the high to the low before that open, notice we were just playing in that range. Yeah, we took out the low, but we just played with it. We didn't just run that low, we just swept it. That's it. We stayed between the range created at the initial point of the day. I'll take your attention at one more day where we did this. London starts, we push down. Let's take everything off my chart. Okay, right there. New York starts, the high and low, high, low. What happened with price action when the range, the large range was created over London and we had round liquidity? Yeah, we moved to the upside. Yeah, I think we caught this move. We caught the move to the upside into this previous area of distribution, but the range was created the night before. And so these are the type of moves, like once you understand that, it's not that you can't trade it, or it's a poor day to trade, but then you understand, why am I going to hold on to this trade when the range overall today has already been created? When London has already created a very large range, I already know that New York will be very low probability of taking that range out and expanding it. Right? Does that make sense? Drop some sevens in the chat if that's making sense. I want you guys to start seeing price action, not just for your confirmations, but to truly understand it in a deeper way. Drop some sevens are coming up. Cool. Yeah, I want this to really make sense. So the range was created during London. We stayed within that range during New York. The range was pretty small during London, right? Asian, London, all right there. Pretty small. We take it out there during New York, and then we expand on it during New York. We run that whole range, right? See how we ran the high and basically the low. Yep, the lows. Right? We ran that whole range, the small range. Here's a small range day for London. Here you have the lows right there, the highs right here. Small range, we take out the high, right? Come into previous daily high. No range was really created during London, and here we are. During New York. Remember, a small range day. What are small range days? Just liquidity buildups. We take out the high to then just run the low. We just acknowledged two ranges right there. We acknowledged the previous daily high to the previous daily low, which was a small day range. Then you have the range between Asian to London for indices. If that range is small, that price range is small, pretty tight, the likelihood is that New York is going to make the overall range of the day. But when you have really tight ranges like that, like for example, like today, or when you have really just today we had a fat ass range, so not today. But when you have tight ranges like that, don't be discouraged. Don't be like, ah, damn, like, price action, I don't know what price action wants to do. Your initial bias of bearishness or bullishness was more than likely correct. It's just sometimes we need a day or two for liquidity to build up to create these like ranges, right? We have that previous daily range right there. We have that previous session range as well. It's just liquidity being built up in different phases, right? And he said was holding a buy on that day, but That makes so much sense why I should have just closed it on my first target. Yeah. So like understanding your range could help you identify, when we're actually going to run the highs and the lows, and when we're, sometimes I don't know if you guys hear me say is like, I don't think the high's going to get taken. I'm going to take profit right here. And it's because those ranges, like sometimes we'll run the highs, sometimes we really won't. And I prefer to play it safe. Okay. So again, here it is, right? Those small range days, the tight ranges, right? Sometimes during London, we'll get somewhat of a range. We'll mitigate it, yeah, but for the most part, those small range during London are my favorite days. Like these tight ranges during London, from the open through before New York, because then all we do is just like sweep these tight range days, right? Sweep them out, sweep the tight range created overnight before New York session. New York session comes in, takes out the high, then runs for the low. It's like I just showed you the same chart, huh? Like this, the exact same setup, the exact same way, literally a couple of days before. Right? It happens all the time, very consecutively. You just have to understand your range. I'm not just talking about like a structure range. Like sometimes your ranges are not always structure. Sometimes they're anchor points to where liquidity was last taken. So I'll show you guys an example. So you guys see this low right here, it didn't really sweep any liquidity, but this high definitely did. So from this low that did sweep liquidity to that high that did sweep liquidity, like that would be my whole range. Even though structure is telling me otherwise, I would play within this range right here, right? Because liquidity to these extremities has not been taken. And so you can in a way call this your premium, right? And then your discounted price action. And I'm going like a little bit down the rabbit hole, but right? So not necessarily always will your range just be based purely off structure. Sometimes it can be directed purely off these liquidity sweeps, right? We took out the high here. This is the next increment point. And when we took out the lows here, that's the next point right there. That's your whole range, right? Any distribution 50% and above, that's premium, right? Any return back to down here, 50% and below, that's discount, right? So you guys can see here. All right, now we're going to add everything together, okay? So, where is that? Okay, so now we're gonna add everything together. So now we have, right? We have a small range during London, right? Small range from the open to London, very tight. We sweep London's high, okay? We sweep all these previous highs as well, right? And then push down and create our range, right? But we create a very tight London, and then we run for the highs, right? You guys see that? Very clean. Then we run for the London low. Very tight. That's how you know New York's gonna have a pretty decent movement. Why? London, that overnight movement. See, Asian to London, tight. New York will make the most of the range. Okay. A small range day, check this out. Small range day from here to here. Literally, I'm like showing you guys the exact same thing, but now we're adding more institutional plays. So small range day, we get what? We dip down, we get an accumulation in what? We're in discount. We're in the discount of this range. So during New York, since we have a small range in London, we can anticipate the small range during London to get ran. Okay, there you go. You have an intraday setup right there. That right there is an intraday setup. The longs into the London highs, into the small range, taking out that initial small range of the day. This is sauce right here. Check this out. Now we're going back into premium, the premium end of our range. We take out what? Previous daily high. We take out yesterday what we set on the previous day. We set a previous range. Doesn't this look very familiar to the last previous two setups that I've shown you? A small range on a daily. We sweep the high on a bearishness. We're also in premium price action. Then we move to the downside, right? And sweep that. We rated that smaller range day, right? And how did we do it? We did it in a very similar fashion. We created a very tight range, okay? And during New York, we just dumped and broke all that. I believe this might have been CPI. I could be absolutely wrong. I think it was Thursday. No, I don't know what news. There was definitely news this day because CPI was right here. I don't know if it was FOMC or something, but something made this drop pretty heavily. But again, tight range. London swept the Asian high and the previous daily high. So London was probably pretty safe to say that that one didn't have to be swept because it already had taken that previous daily high and the Asian high. But then we just dump, right? We run through this range and dump. Very similar, right? And then we dump what? Down to discount. Once we get into discount, right? Once we get into discount, notice we get into discount, rate the low, and then we return right back to what? Premium. Premium price action moves us lower one last time. We create a nice accumulation where over here in discount, we're at the discount point of our range. We took out liquidity. We ran the lowest point of our range. What are we going to anticipate below the lows? In discount, some accumulation. Now you have this whole range within here. If you're bearish and you're anticipating more bearishness, cut your range in half. Right? We're in the discounted, we're in the premium inside the discount. Within your bearishness, because not always will we return 50% and above. When you're super bearish, okay, your discounted price action has its own premium. And we will continue down from that premium. But notice we came right back to that premium. Right, 50% and above of this range right here. Come back, premium, dump. Right? That was a bigger range for the day, but we still took out. We respected it overall. Previous range, Asian high, low. Next day we're rated. Right? Anyways, here we had another small, a larger range day, and then we actually like fell right through for New York. So not always, like, these aren't, I guess, like laws or anything like that. Just a really unique way to study price action and notice things. of being able to avoid a day like today, for example. Like, it's not that you couldn't catch a trade, it's just that the range was different than other days, right? This one was just created a lot earlier in the day, and so we can I believe Nasdaq was the one. Nasdaq ran right through that range, right? And it didn't fly through that range, but it did go above that range, right? It did take most of the range. It didn't take all of it, because it would have swept the low too, but it did take the high of it, right? We took back most of it on NAS. NAS is pretty bullish on the weekly, daily, in comparison to Dow, who's clearly in comparison to Nasdaq. Let's look at this. Notice on Nasdaq here on the daily, Nasdaq's high right here. By the time we created this lower low, we had already taken out that low at this point, at the beginning of March. Nasdaq took a couple of more days to take that out. So Nasdaq was having a harder time. Basically what that's saying, Nasdaq was having a harder time falling than Dow. Dow was selling off harder. Nas was selling off with a harder time. Now Nasdaq, because it was stronger, is having an easier time going long and taking out the highs. Dow, on the other hand, is clearly the weaker asset because we're still at a lower high, while Nasdaq is over here busy creating this new higher high on the daily. We're over here on Dow struggling to even get a lower high to take place, right? So just inter-market analysis, looking at your price action, your ranges, understanding the days to stay in, the days that are worth it, the days that are not, right? I showed you guys something to back test. All right, I don't like to fill up your day with too much, so I'm going to dive into a trade that I took earlier this week, and I'll wrap it up after that. Yeah, it was yesterday or 2 days ago for some of you. So here on Dow, been looking at some longs, potential longs into this imbalance. Okay, and I had noticed all this equal lows that we created here. So I really like this accumulation. At the moment, we had price action like this. Okay. So I really liked all these equal lows that we had. So me personally, I was looking at this 30-minute imbalance here. Okay. And really just looking at those previous daily highs and this internal liquidity point right here. Okay, and so notice that these equal lows were still intact even after the open. Right, oh, this was CPI. Okay, so notice the equal lows were intact even after the open. But what I will note is this. Okay, I want you guys to start all doing this. Look at your previous 1 hour lows and highs. After the open or around the open, look for liquidity to be swept. So this is that previous 1 hour low right there. Okay, so that's enough support for me. That's the intraday support level. Okay, intraday support level right there. Then we waited for, or I waited for price action to accumulate. Okay, we had taken out support, so this low now becomes a good low to put my stop loss at. And then we had accumulated here. So we had this imbalance here, No, it wasn't that one. It was this bearish one right here. So I was looking at this imbalance here, because I said, look, if we pass and trade over this imbalance and take out this high, okay, showing us a shift in structure, and that this previous area of distribution or this previous area of resistance is indeed going to be traded through, then that indicates, okay, so that indicates, sorry, I got a message and it's distracted me a little bit. That indicates that we're going to be continuing to the upside and that we don't have resistance to continue buying, right? And so that price action goes higher. We'll leave some imbalance in there. We have this whole candle here as well, this order block. Okay. We trade it back into that order block. Here, that's, I believe this is my first entry right there. Was that first down candle after we took out the high and traded back into this order block. That was my first entry, I believe. And here into this imbalance was my second entry. Okay, and really just aiming for that high, because CPI was weird. Like, you know, we've been seeing some crazy ass CPIs, so to me that one was weird. So I was just like, all right, clearly like the volatility is not here yet, right? And so sometimes I'll give you guys a big tip when it comes to these ranges after news. Sometimes when the range that's created during news, it's either going to be big and that's your daily range. That's usually within the range that we'll be trading at for the day. The likelihood is, okay? Or you'll get some like spike of the high, spike of the low, and it's very tight and small. And those ranges are usually going to be taken out, but most of the volatility was injected right there, right off the bat, right away. And so don't really expect volatility. For example, if you have a really bad NFP, if you have a really tight CPI, FOMC, if you have any really tight ranges of those news, we're more than likely going to raid them, either the high or the low. But don't expect volatility to fully kick in till after lunch. Lunch hour is from noon till 1. And those, I promise you, like, just keep an eye on those. Because, okay, now we'll mark out what happened at 1 p.m. We got a small ass range. Now I want to mark out, okay, what's going to happen at 1 p.m. after lunch, okay? We take out that high, we hit take profit, right? We keep pushing higher. There's a lot of wonkiness here, right? I'm not really expecting anything. And then lunchtime, right? We're not trading during lunch. Doesn't make sense. And then boom. After the 1 hour, what happens? 1 p.m. hits. We smack down, come into this previous area of accumulation, sweep previous 1 hour lows. We may even take it the whole thing. I don't think so. I think this is the low. We to round that low, and right after, again, like right after lunch, look at this whole price action here. Oh, this was the wrong day. Either way, volatility right after 1 starts kicking in. Oh, there it is. I just need to click it a little bit more. Volatility will usually kick in afterwards, but again, like the ranges for these really, I guess you guys can say, spiky news. I don't know how to describe them. The ones that really don't go anywhere but wick out the lows and the highs. Just spike the highs, spike the lows. Don't expect those to be high volatility days. I think Nas was the only one that kind of did something a lot better than Dow. So if you were trading Nas, it was a lot better. But yeah, these low volatility days, I usually stay away from them because volatility or the move won't take place till after lunch. Okay, and my time to go back to from lunch is at 1:30. 1:30. After 1:30, I'll look for liquidity to get ran and then expect the move to continue or take place overall. For Dow, really was a wonky day overall during CPI, but that doesn't mean, like I said, you don't have to trade or you won't find the setup. Like, the setup was there, we saw it, walked you guys right through it, but I did not hold on to it. It wasn't something that, you know, if CPI would have done some big ass movement and came back to it, then yeah, I would have held on to that. But because CPI was just a spike of the low high, created a very small tight range, I'm not really looking for any crazy volatilities till lunchtime, right? But yeah, guys, I think we're gonna wrap it up right there. yeah, I think we're gonna wrap it up right there. But guys, if you guys have any questions about the mentorship moving forward, if you guys have any questions about, you know, liquidity, or want to get more information on defining your entries or working on a trading plan, anything like that, please don't hesitate to hit me up. And you know, I'm happy to help in any way that I can, or showing you resources. But yeah, guys, I appreciate you guys tuning in. If you guys have any questions, comments, or observations throughout any of these videos, just hit me up. Remember, like, study these, like, don't just take everything that I tell you guys, just study it. Like, time to backtest. Yes, I love that. Backtest the hell out of it until you guys see whether it's right, wrong, whether it works for you or not. Like, maybe you don't trade afternoon period, or maybe that's something that you can start integrating. And maybe, you know, this will save you unnecessary losses in the future, right? That's really where I'm aiming for here, is getting you guys to the point where you're not having to take so many unnecessary losses and enjoy more of the trades that you do take. So anyways, guys, have an amazing night, rest of your week. I'll see you guys tomorrow during New York. Take care and clap easy.